But we have Sharad here, like I mentioned, to talk about the companies that are in focus on back of the Q1 update. So which sectors are you going to speak? Banks, FMCG, both, or only banks?
Actually, all of them.
All of them, wow.
Titan, FMCG, banks, and even other updates.
Given the fact that Soumit definitely had a very busy morning, he's making sure that he'll speak on
it was busy for him because half of our team was also not there.
Yes, exactly.
Exactly, and they're actually keeping the entire stocks are also keeping us busy throughout the day. The first one being Titan, weak set of numbers coming in. Company registered 9% year-on-year basis growth, and of course, this is the first time it's coming in a single-digit growth since fourth quarter of FY22. Now, two important reasons for the downfall. One is the higher gold prices and low wedding days, which have been registered. Now, FMCG, if you look at it, largely all the three broadline names, Adani Wilmar, Dabur and Marico, they have been largely in line with street expectations. Adani going up 13% volume growth and a double-digit revenue growth estimated, while for Dabur, they're expecting that the consolidated revenue is expected to register mid to high single-digit growth, and overall the India business is also expected to record mid-single-digit. Now, for Marico itself, the consolidated revenue is expected to go in high single digits, and all three companies have actually stated that there would be a marginal increase in the margins overall going ahead for. So this is the first one, being the Titan and the consumer names.
All right, so that is about the Titan, the consumer names. What about the banking space then, Sharad? Because what's the picture there like? Because you had a couple of private sector banks that came out with their numbers. You have some PSU banks as well, right?
Well, yes, there was a mix of both banks, but just imagine all of the banks mostly have come up with weak set of numbers. That's pretty surprising. First, like to see is IndusInd Bank, advances growth or beat the deposit growth. Both have come below the guidance range which the banks had given. And for the sixth straight quarter, CASA has been falling. When it comes to Bank of Baroda also, advances deposit as single rate growth, and sequentially the numbers have been weak. Of course, they have approved a 7,500 crore fundraise. Union Bank of India also sequentially muted performance coming in, advances going up 11% while deposits jumping 9%. Jammu Kashmir Bank weaker than expected. The guidance numbers coming in, the guidance was basically for credit growth at around 15% while for AU Small Finance Bank the numbers have been largely in line. But do remember, year-on-year basis the numbers are not comparable because of the merger. And the company's commentary was that they would be focusing to utilize the excess liquidity to reduce their cost of funds. Amongst the other updates, Info Edge had come out with the inline set of numbers when it comes to their billings, while for Nykaa it has been weak, and importantly the revenue growth is expected to be around 22 to 23%. Out of this pack, and the surprising move is from the real estate Signature Global, where the collections have gone up by 255%, and overall the collections have jumped double. And lastly, Tata Steel, inline set of numbers when it comes to the production. So this is the entire list we have compiled of all the Q1 updates.
Right, the entire list compiled by Sharad. Definitely busy morning coming in for Sharad, but it's various sectors, and we'll also have a busy 1 to 2 weeks, isn't it, Soumit, now with the
with the earnings starting in and the Q1 updates coming in, few more companies are just left which will come in the next few days, and from 11 July we have the earnings starting. TCS will start off with the numbers, and so far at least the market is expecting a strong set of numbers, because if you see the Nifty IT index, it has been gaining in the last couple of weeks. So strong numbers are expected. Some turnaround is expected in the announcements to come in from TCS. So let's see.
Yes, absolutely. Let's see. But then let's actually hear out what's the editor's take coming in on the FMCG counters, given the major FMCG companies have already come out with the operational performance, where Dabur's India business is likely to see a mid-single digit volume growth. Marico's consolidated revenue is expected to be in high single digit. And what exactly lies for that space, given the fact that it has been buzz ever since we've had the election results. So let's hear out Nikunj Dalmia's take on that.
You actually will see outperformance coming in, especially FMCG, rural housing, and anything which has got to do with a demand push. That's how markets would move. The budget date is out. Large part of attention would be, okay, how will this budget be different from last year's budget? If last year's budget was in a sense highly focused on capital expenditure, what could be capital expenditure plus? The grain of the truth here is that the rural economy is not in a good shape. It needs push. Push will only come by spending. Spending will only come by tax cuts, which means market will start talking about tax cuts and push to rural economy. If that is the underlying moot point, that means FMCG stocks, which had this big day on 4th of June and they little bit of follow-up buying after that, they've not really seen a follow-up buying. But now that budget is out, it's raining and it's pouring, monsoons are in a the progress, you may not like what's happening in the roads of Mumbai, but in general, the monsoon progress has been strong. Markets automatically will start moving into defensives, and at a time when the tailwind for the sector seems to be that recovery actually started and inflation is not coming back. So in the run-up to the election, there is a case for FMCG stocks minus HUL, which is expensive, and minus Titan to start outperforming. So I think the themes now which you need to focus on, if it was only roads, railways, defense, which used to be typical infrastructure, typical budget trade, this time it really could be FMCG, rural housing, and maybe some odd rural facing companies.
Well, we also have Kunal with us to give us his technical view when it comes to the Nifty Bank and the Nifty FMCG index and any stocks that he's preferring in both this indices. So Kunal, how do you see the Nifty Bank and the Nifty FMCG index and any stocks?
So both are at different divergence in terms of trend. Bank Nifty is showing signs of weakness over the last 3 days. And we've seen at least a 1,000 point plus kind of a correction on the Bank Nifty in the last 3 days from the highs of I think 53,500 approximately. So I think in that aspect, I would probably expect that this weakness or sluggishness, would continue for the banking index, because many private sector banking stocks are showing signs of drag as well as some minor breakdowns on their hourly charts. But on the other hand, the FMCG index is now coming back into the fray. Many of the stocks have given signs of a very big breakout, and the likes of Britannia, which I recommended last week. Dabur is also something which is looking attractive, about the 605, 610 mark. It's completing bullish flag formations for itself. Nestle, etc. Many of the stocks are showing signs of a breakout for themselves. So I would probably believe that this could be in the anticipation that the sector could start outperforming. We had seen the first leg of rally for the month of June for these FMCG names. Post that, for almost 2.5 odd weeks, these stocks were consolidating. And now there's a second round of up move for these stocks. So when you look at this in the entirety over the last 1.5 odd month, this is a strong trend in the making, which should have more legs on the upside.
All right, so that's the take coming in on the FMCG sector from Kunal. But
If you like this video, then like, share and subscribe to ET Now.